Good morning, Academy 55 premium members and everybody else who is watching the recording. David Kahn on 5 to 8 on the 15th, Wednesday, the 15th of January 2025. Looking at the EUR USD, hopefully maybe taking a trade on the 1 minute time frame. Looking at the US Academy 55 indicators and strategy. First of all, though, we are briefly on the 5 minute time frame. Looking at the zones, we have a sell zone there and a buy zone down there. But first of all, what we'll do is we'll mark up the charts. So I like to go to the daily and have a look what's happening on the daily time frame. And get rid of this noise here. Right, so what can we see? We can see, oh, put that done there, I moved that accidentally. If you move something accidentally, you just go undo, and it puts it right back again. So this is the daily time frame. And we can see we've had a general decline of the EUR. The US dollar is getting stronger and stronger. Till here, it was the US dollar was the strongest it's been for a long while. But we're still heading on that trajectory going down. Looking at the 4-hourly now, it helps to get the bigger picture. And is this a point where we actually turn around now? On the 4-hourly, we were the lowest there, and now is the dollar getting weaker and the EU getting stronger, may possibly going up to these levels here. Let's put I like to draw a fib up. Don't forget this is on the 4-hourly, so this won't be immediate in any way. Just go from the highest high to the lower low. And oh, look at that. Isn't that funny? We're at 50% of the down right now, but we could be getting up into these areas for the long term. We get the right tool. Between 88 to 71.2 on the fib. I call this the kill zone, where price could be heading to before turning around again. Get the right box. I call it the kill zone. There we go, that area there. Move that. And also within there is imbalance. There's imbalance down here that needs to be sorted. So we'll mark that up. This area here is imbalance. Again, got the wrong box for that. So that's a sell FVG, fair value gap. So there we go. And also we got imbalance down here as well. So I'll have to mark that up. From that wick there. So that bit there, that's all in balance. Get the right box for that. That's a buy fair value gap. That means there's be more buying in there. So if we're selling, price might want to get into that area there. So we got a few boxes. Now I'll turn it over to the line chart and look for points of interest. like for example, right there, get the horizontal line, because there it's been support, but there resistance. So that line around about that area there is pretty much important. And oh look, it's near the what we call the key zone. Anything with 3 zeros at the end of it. So that's an important area. That's where we are at right now. So we'll go down to the hourly and see if we can get some bit more accurate with these moves. Like for example, this area here. I won't go lower than the hourly, but this area here was straight along there for an hour. Then it was resistance, support, support, support. So that area there, all around the key zone area. And this area up here is an area worth note because it stayed around here for a long time, for an hour. Then it was there again. So that area there needs to be respected. Putting our candles back on, going down to the 5 minute. So we got all these areas of interest showing up here. Is price come down to tap into this buy zone again? Or will it carry on up to this, through this sell zone? No matter. We got a little bit more of an idea of what's going on. So I'm going to put a horizontal ray actually. This is a key sell zone. Then we've got the buy zone down here. So I feel I'm more in control of what I think price is doing. So we go down to the minute and put my indicators on. So now I feel I have a little bit more of an idea of the areas where price will maybe stall, want to get to for whatever reason. So it's no longer a surprise why price does these things. But now we're in the sell zone. So we're looking for the next sell. Incidentally, I want this is from TradingView itself. Going to read this together. This is in the little purple bit. Some of you may skip this, but it's the truth about success in trading. Nothing or no one is stopping you from being a successful trader but yourself. It's not the market, and no, it's not the broker. Majority traders quit after blowing a few accounts. The rest stick around for years but make no progress. Only a few percentage of them actually find the meaning behind it and succeed. What's the secret? Signals, prop firms, account managers, EAs? No. Sure, all these things can benefit you slightly, but what truly is the secret to being successful in trading is you. You are the secret. Understanding yourself, your emotions, your reactions to certain events. Trading is a mirror of you, an amplified picture of you. Are you impatient, scared, nervous, greedy? Forex will amplify these emotions. The biggest battle you have to win is the battle with yourself, not the market. Trading is easy. You have a trading plan. You stick to it. Sometimes you may have a losing week. Happens, right? But as long as you're sticking to your strategy, understanding the market, using a positive risk to reward, and understanding the importance of consistency, you should be fine. But here is the hard part. Your actions, your emotions, that's the hard part. For example, today, the non-farm payroll data release, weeks or even months of progress can be wiped out due to irrational decisions during news. Well, we don't trade the news anyway. Don't be that guy. Suppress your emotions. Don't get greedy. Take a jab at the market, but only after the data's out. Remember, no one is stopping you from being a successful trader but yourself. Well, there we go. That comes from TradingView itself. So open that little thing up, go to Minds, read it, take a snapshot of that, put it on your wall. Excellent stuff from TradingView. That's TradingView itself saying that. We all say it all along, but now it's coming from the horse's mouth, as it were. Yeah, trading is a journey involving yourself. Right, back to business. We are now in the sell zone area. So let's get this trader system up and going.
Hi, this is Steve, and in this short video I'm going to just show you the settings for the trade assistant to make sure that you've got the minimum 2-pip stop loss on the Euro USD or any currency pair, and how you set it for if you're trading a commodity like the US 100, because the settings are slightly different. So here you can see we're on the Euro USD chart here. I've got my risk to reward on the trade assistant locked at 2-to-1. I've got my risk balance at 1%. Lot calculator is on, and my little purple button here between the buy and sell is also activated. So we're ready to bring the trade assistant onto the chart. Now you'll notice here that we've got the stop loss set at 20. That indicates 2 pips when you're on a currency pair. And we can actually change that here by typing over it. So if I type in there 40 and just tab off here, you can see now we've got a stop loss of 4 pips because we're on a currency pair. In this example, it's Euro USD, but it could be Euro GBP or any currency pair. So let's just put that back to 20 for our 2 pips. We'll click off here, and now we'll just put the lines on so that you can see that is showing us 2 pips over here on the actual tool, ready to actually get involved with a trade if that's what we were going to do. But that's not what we're here for now. I'm going to click off the lines here, and what we're going to do is we're going to change our chart from Euro USD to US 100, and I can do that by dragging it onto the screen here. You'll see it now switch over to US 100, and now you can see that stop loss says 20, and that's wrong for a commodity. So what we want to do here is come in here and type 2000. This is the equivalent of 2 pips on a commodity such as US 100. So now when I put the lines on, you'll see we've got the number 2000 here, and if I just zoom around, you'll notice the 2-to-1 still applies, 2000 and 4000 here, where we've got a $1,000 trade in place, risking $1,000 to win $2,000. So that's the number that you need to get your 2-pip minimum on. So the minimum number would be 2,000. You could have anything above that if you're on a commodity like US 100, and the number will be 20, which is 2 pips equivalent if you're on a currency pair such as Euro USD. Hopefully you found this useful, and thanks very much for watching.
Indeed, we did find it useful, Steve. Thank you very much for that. And the reason we go for 2000 on US 100 is because anything less than that, there isn't really much volume in the candle. but we're on the EUR USD at the moment. Nothing much has happened. We're still on the way up. Let's just see if that was a zonal trade. I'm not sure. Go there. Put it on the 5-minute time frame. No, it wasn't quite in the buy zone, was it? But indeed, it was a successful trade. There we go. So unfortunately, we would have missed that one. Well, one, I'm not up 7:20 in the morning. Well, I am to prepare for what I'm doing with you guys, but not looking at to trade. So there we are. We're firmly in a sell zone now. We've got the stuff we marked up. I firmly suspect price will want to get into this kill zone area here, where we know those marks on the Fibonacci I drew up. But that's a long way away yet. We could have a few more retracements, shenanigans all the way up. But this rally here now, are they looking to at least tap into this imbalance before coming back down again, picking up the sell orders as they go? All depends how many sell orders there are. If there's enough sell orders, it will bring it down again, possibly into this area here. But the price market loves balance. So this is where we are at. Yeah, so once again, press that little pocket there, flip it over to where it says mines, read that, very illuminating and interesting. Take a screenshot of it, because that's our mantra. Pin it on your wall, tattoo it on your body. Don't go that. But yeah, so as far as the news is concerned, we have no red flag news to worry about at the moment. Got time to show you this one from yesterday. Where are we? Go there. Hello, Academy 55 and premium members and everybody else who's watching. This is from me yesterday. This is my second trade today. As you can see, I've waited till after 2:30 in the afternoon on the US 100, taking a trade on a buy that's been given to me. The volume has increased because of the opening of the New York Stock Exchange, and I'm following the Academy 55 indicators to hopefully a potential buy that's going to be happening. As you can see, I've got a green volume, green wave just appeared, an anticipation of the trend line. But like I said, the volume is that great at the moment. It's got to be an anticipation of the green trend line. Actually, the trend line's just gone green now, so everything's above board, and just waiting for that final little bit of volume push, and indeed I will be getting my 2%. Today being Tuesday, the 14th of January. It's now 14:38. This could be one of the quickest trades. But when the volume kicks in, that's what I like about US 100. When the volume kicks in, the volume does kick in, and when it goes, it goes. So hopefully you'll see me get my 2%, and oh, there we go, 2%. Thank you very much. See you. There we go. So, right, today's action, we are going down to the one. Right, we're close to possibly a sell, so we'll put our MT4 on now. I want 2.2 pips. That's what I usually go for, so we'll do that. Put it on line chart. Oh, 22. There we go. So now we are in this, we've been in the 5 minute, we've been in the sell zone. So indeed we are looking for possibly a sell. But we want that alert, the sell alert. And also that's better. Have a quick look on the 5 minute. So we've got this, all this is in balance now, and we've got imbalance down here as well that needs to be filled on the 5 minute time frame. So maybe hopefully they would do that if we do get a sell brewing down below this area. But as we know, we got bigger imbalance above. So again, it all depends on the timings of these things when they wish to equalize these imbalances. But as we know, also we've got imbalance down here. So really, it's equalizing itself really. So we're in between the two bigger imbalances. So really, we could not talk about that because it doesn't mean too much. Do they go up? Do they go down? We don't know. All we're doing is being guided by the Academy 55 indicators and strategy. Right, this is where we've got a sell alert. Again, anticipating the green trend line turning, but I'm looking at the take profit here. I want the take profit to be around the purple line area. So I was anticipating the trend line turning red, which it will do. I mean, obviously, if we end up down here, that trend line will go red. It's usually the last one to change, but we've got a red wave, red volume, red alert, sell alert. And you can see the red wave now. It was masked by that candle there, but there it is. And I've got a 3.4 pip stop loss. Like I say, we've got a balance down here that we know. I'm going to draw it up on trading view as well. Like I say, now we're at this area now where we've got a support and resistance line. Hopefully we'll have enough oomph to get over that. 3.4, which is there. 2 to 1 is down there, just underneath it. So that's where we are. This is the trading view version. As we can see, we put it on the 5-minute time frame. We've got imbalances down here that need to be filled, and hopefully they'll want to do that before filling out these imbalances, but one never knows. And our take profit is in the way. So let's just hope that we got enough volume to pull us down towards our take profit, but we're bouncing off this support and resistance line now. If we get enough volume to push over that, this line that we drew up for ourselves earlier on, and also here we got a key zone area, so we got two major obstacles to hopefully have enough volume to push over. But at the end of the day, it's a 1% loss if indeed that is what we're going to be assuming. The trend line has gone red now. Look, trend line is red in anticipation of that. So, but I would have waited till price was down there, which would have dragged my take profit even further down. Now we just wait and see if we have a winner. Looking at the 5-minute time frame, pleased to see the parabolic SAR has been flipped on the 5-minute to above price, pushing it down. But we have all this imbalance. Now the thing is, are they going to say that for later? Or are they going to do it right away? We got imbalance down here, look. All about timing, all about the strength of the dollar, ultimately. The EUR just follows along, really. Ultimately, the dollar's in charge because it's 55% of the 8 major forex pairs. Where is the purple line on the 5-minute? We are well above the purple line on the 5 minutes, so there is a buy bias. So this is a retracement trade, and we'll have to wait and see. If we take a 1% loss, we take a 1% loss, take it on the chin. I'll come back later on today and possibly trade the US 100 just like I did yesterday or similar to that. Because at 2:30 the volume increases on the and if you can, and again, if you marry it up with the Academy 55 strategy, then I often have good results, but I don't let one trade define what's going on. Never be defined by one day's trading or even a week's trading, because we have bad weeks as well. But you look at the bigger picture, and just like that, I hope you took a screenshot of what we were reading out earlier on. Just like trading is all about you, really, your emotions, and it's mirroring you. The Academy 55 indicators will help you determine where to get in and where to put your stop loss. But the rest is experience and knowing when to trade, knowing when to leave it, and having the strength in your mind to say, you know what, I'll come back later on, or I'll come back tomorrow even, because it's price is bunching up and going sideways. So you're not suffering from what we call FOMO, fear of missing out. That's all down to you to recognize that and have the confidence in that decision and just walk away and not try and trade it. And have the strength of character to accept a 1% loss or a 2% win and just carry on. Those support and resistance lines I drew are just points of interest to give you more confidence in why price is going the way it's going and give you a little bit more of a feel to why price is doing what it's doing. And if you have a bit more of a feel for that, knowledge is power at the end of the day. Right, we're coming up to the purple line now. Are we going to bounce or break it? Hopefully we'll break it and get our 2%. But one never knows in this game. See, at this juncture here now, I'm going to put my stop loss to my entry because or will I? I don't know. No, I'm not going to. I'm not going to. No, I know most of all I do. But I'm going to go back up to 1%. This time I'm going to take it on the chin. If indeed I have to. But as you can see, I'm at 1% again. So I'm not going to move anything. And I don't know why I've changed my mentality. When I first started this many, many months ago, I used to advise people to walk away and put the kettle on, or not even. There's no need for you to be watching all this because it just affects your mindset. There's nothing you can do about it. We've made our decision. We saw what was happening. We realize there's reasons for price to get down here if it wants to. But there's also reasons for it to go up if it wants to. So again, that's not our decision to make. Unfortunately, that's the decision of traders or whatever. But it's also true to say that there are reasons to protect your equity. So yeah, I'm changing my mind again. There's two different ways. I'm conflicted. I am conflicted. I'm dragging it down now to the parabolic star. So now I've got nearly $200 on a $100,000 account. Other people may stay with their stop loss up there, which is fine, and accept a 1% loss. Me, I'm going to be following it down because again, my mindset is slightly different because I'm trading with you guys and I feel not the weight of responsibility, that's too heavy-handed, but I got a little bit of a responsibility to try and save your I mean, first of all, let me say, all trading that I do on here is for educational purposes only. I'm not asking you to trade, but I also realize people do copy me. So I have that in the back of my mind. So with that being said, I bear that in mind, and because of that, I feel a little bit of responsibility to at least come away with a bit of money and protect your equity at the same time. And now I've got $360. Going to drag it down a bit more to that area there. Now I've got $526 on a $100,000 account. Hopefully for a little bit of a push, but price is going sideways now. Picking up more orders. Are they buy orders? Are they sell orders? Hopefully there'll be sell orders to push it down a bit more. But if it comes to take me out, I've got a little bit of money for my time with you. So I'm not going to be losing today. And also we're at the purple line as well, where we know it either bounces or breaks. I'm going to stay there. And if it breaks it, it breaks it. That's one way of doing it. There's several different ways of trading. Protecting your equity is a very, very important part of trading. Well, it's essential part of trading, to be fair. But the reality is I'm about two pips away from my goal. But at least if it does come back and carry on up again to get these imbalances before getting these imbalances down here, at least I'll have a bit of money to spur me on, and you never get broke by taking a profit. But now the volume's gone out of the market. We can see that by the length of the candles. The thing is, are they picking up more sell orders or more buy orders? Bring that down there a little bit. Oh, and just as I did that, we got our 2%. So another successful trade. I'm going to throw open the chat just for 2 minutes in case anybody's got anything to say. Text it in the chat. And so I'm done for the day. If you're successful in the first trade, you've made your 2%. You walk away. If you have a 1% loss, you can trade one more time again today if the conditions are right and if you want to. And then obviously, if you win that second trade, you are 1% up. And that's all we do. the challenge for you is to determine if it is a good time to trade. We've got all the clues there. Is price going into, on the 5-minute time frame, is it going into the zone? All the clues are there. Right, so for example, now we do this just in case anybody's writing something in the chat for me to answer. Let's just will it play ball? There we go. Right, so what I do now is I go over there, copy link, then I come over to my journal, right click, paste that link into there. It was a sell. Why is it saying loading? I don't know. Ah, there we go. EURUSD. It was between 8 and 9. It was on Wednesday. So just drag that down. It was a sell. It won. And it won 2%. So there we go. So now, so far this month, I'm on 5.4%. Halfway between to my target. So that's good. Like I say, I'm done for the day. We have no questions. That's fine. No worries at all. Have a great day, and we'll speak to you soon. Oh yeah, I'm here again tomorrow morning. While I'm here, let's just put the I think it's tomorrow actually. There is let's go for Wednesday. Oh no, it isn't. Oh yeah, tomorrow we have 8 o'clock. We have a speech. So we won't be doing, well, yeah, we will be trading, but I'm going to give it a good 5 to 10 minutes. Well, we'll see at the time. We'll see at the time. So, with that being said, guys and girls, thanks very much for being along today. Really do appreciate you, and hopefully you are having a successful time with Academy 55, and we'll speak to you again tomorrow. Have a great day. Cheers for now. Bye.